We are well overdue a Rolls-Royce update, so let's get into it. And what we critically want to know is, where's it going to go from here? First of all, I'm still invested. Here's my position here. One of these sides, I'll put it on. I'm about 100% up. I've got about 1,500 quid invested into this business, so not a massive amount, but 100% up. I'm pretty happy with that. Now, I did do a video about 7 or 8 months ago. I'll put a link here where I did predict that the stock would increase by 100% over the course of this year. It's as much a luck as it is judgment. So anyone out there that's telling you they're going to tell you when a stock's going to go up by 100%, as I said in that video, it could go down by 50%. It can go up by 100%. Who knows? It is just my judgment call. I am not a professional. Even the professionals get these things wrong. So even if I was a professional, who knows? All I'm saying is take everything I say with a pinch of salt. However, Rolls-Royce is now up 200% from its lows 12 months ago. 200%. In fact, that makes it one of, if not the most successful FTSE 100 business in the last year. Now, I don't have a massive allocation, as I said, so 1,500 quid in a portfolio of about £60,000 means, as a percentage, I've got about 2.5% of my investing allocation put into Rolls-Royce. And for me, that level of risk is absolutely fine because, by Christ, I've had some car crashes in that portfolio too. And I'm looking at you, Branson. But listen, 1,500 quid is still 1,500 quid. And for me, that's a lot of money. So naturally, I'm pretty happy with my returns. But just like you, I don't want it all to disappear. So now I think is a critical time for Rolls-Royce investors. And what we want to know is, what next? Now also, before we get into that, bear in mind that the stock is actually down 10% over the course of the last month. Is that a warning for things to come? Or is that just a bit of a correction like is happening across the market at the moment? Now for me, actually, I think on paper, the business still looks like it's a bit of a bargain. Specifically, when we look at the forward-looking price to earnings growth, the PEG ratio. Currently, the PEG ratio for Rolls-Royce is sitting at 0.1. Don't forget the PEG ratio is a stock's price to earnings ratio divided by the growth. So that gives you a good indication of two things: the value of the business now, and also any potential growth that there may be coming in the near future. And any reading below 1 is typically perceived to be pretty good. That's got some good potential in it. And don't forget, I said Rolls-Royce is at 0.1. Now this pretty tasty PEG ratio has got analysts pretty excited about this business as well, and they have forecasted that earnings could increase by as much as 370% over the course of 2024. They've also predicted that there is a potential for a 21% growth for the 2 years after that, so significant earnings growth potential within this business in the next 3 years. That's why that PEG ratio is looking so tasty, and this could mean something that has got me really excited about this business, and I'll come on to that in a minute. But first of all, if you want to find more businesses that are going to increase by 100% over the course of a 12-month period, I want to point you in the direction of the description below where I have got the best offer going at the moment for Seeking Alpha. If you've not used Seeking Alpha before, it is probably, as far as I'm concerned, the best analytics platform there is at the moment. Now, I don't know what the deal is on any given day, but I will always guarantee to have the best deal that's out there. That means that you're not going to get it cheaper if you Google it. You're only going to get it cheap if you use that link below. Any questions, let me know. First of all, of course, this is not a guarantee for success. Using that doesn't mean you're going to find 100% growth businesses all over the place. It's just going to help you in terms of your analysis of any businesses that are out there that you're already looking at. Sorry about that. Where do we get to? Bloody wife. Right. As I said, all of this growth means that it's got analysts excited for another reason as well. And it's got me excited as well, in all honesty. And that is because this increase in revenue, this increase in earnings, this projected growth into the future means that it is predicted that the dividend might return in 2024. So the dividend for Rolls-Royce, it's never paid a dividend since I've held it. It disappeared pre-pandemic. It was 2019 that they stopped doing it. So it's been a number of years since they've done it. Obviously, it's been an absolute car crash of a stock ever since. Just look at this chart here. So if we get anywhere back near to those sort of numbers, we'll be in a good place. So that dividend is predicted to be coming back in 2024. Now they're looking at a full year payout of 2.04 pence per share. It's currently anticipated. So not a massive amount. That's going to represent about a 1% dividend. But it's the start of something, isn't it? You know, it's bringing back that dividend, and it can only show good things for the stability of the company. Now, bear in mind that most bigger companies in the UK pay on average a dividend around 3.8%. This is not going to be something to retire on from a dividend payout perspective, but who knows? It may be the beginning of something. It may grow from here. Now, they're also anticipating that the year after that, it will increase to, where is it, 3.53 pence per share. Now, that then would represent a yield of about 1.7%. So a significant increase versus 1%, 70% increase versus 1%. So if we continue that, all of a sudden we're getting into a really tasty dividend business that also potentially has some significant growth associated with it as well. One of the reasons for this is there's been a continued and sustainable growth in the civil aerospace industry over the course of the last 12 months or so. This is even as the cost of living crisis endures. This is even as we're seeing inflation going through the roof. Travel is still in growth. Just this week, United Airlines, one of the three big US operators, announced forecast beating quarterly results, noting it enjoyed strength in close-in bookings in August and September, with both months well ahead of year-on-year demand. Rolls-Royce is also tipped to continue to take advantage of this growth, and the balance sheet as a result is starting to look a lot more healthy, with rising revenues, asset sales, and aggressive streamlining, all helping to plummet the net debt by £2.8 billion as of June. You may have seen in the news over the last few days as well, it's committed to significantly cutting costs, and whilst this is absolutely horrific for those affected, 2,500 people potentially going to be losing their job, it is really streamlining the business to make sure that it is set for long-term future growth. After that announcement, Chief Executive, I always get this wrong, Tufan Ergin Bilgic, said that these measures will help to make a more streamlined and efficient organization that will deliver for our customers, partners, and shareholders, you and I. Now, all of this sounds great. You should just sell your house, remortgage it, and put all your cash into Rolls-Royce, correct? No, well, not necessarily. There's some issues that we need to be considering as well. First of all, the global airline industry still is at risk of crashing back down to earth a little bit. We have seen significant growth over the last 12 months. And in reality, they've taken advantage of that, and prices have been through the roof, but the demand has still been there. But it is at risk of curtailing a little bit. We must bear that in mind. We've also got issues in the Middle East, which is causing oil prices to start to fly again. They're around about $92 a barrel. It is predicted they will go above $100 a barrel in the not too distant future, and that's going to push up operating costs. There is also that outstanding debt, and Rolls-Royce needs to pay back 1.3 billion more pounds by 2025. So they're going to find a lot of cash to service some of that debt, and that debt is significant. This, as well as potential supply chain issues, which we've seen over the last couple of years, 2, 3, 4, 5 years, significant supply chain issues, as well as risk to project delivery timelines going back, means that there are some significant risks for this business as well. Has Rolls-Royce as well overstretched itself? It spent a lot of cash in some of its projects and some of its deliveries that it's expecting to land. If they don't land, could we see some issues in terms of cash flow again? Could we see some issues in terms of them needing to get more debt to get themselves out of trouble? It's not a closed and shut case, I'm afraid. All this being said, then, what is my recommendation? Well, Captain Sit on the Fence shows up again, because in reality, I'm not going to give you one, because yes, there are a lot of upsides, but there are a lot of downsides as well. This on top of the fact that I don't know your situation. I don't know how much you've got to invest, anything about what your goals are. I'm not a financial advisor. What I will tell you is what I'm going to do. I've got 1,500 quid invested into this business. All these things being said make it look pretty exciting, but with some risk associated with it. I've been burned by some risky businesses over the last couple of years. I am going to keep holding it, and I'm going to keep dripping in little bits. I'm talking 20, 30 quid a month, something like that. Nothing to break the bank. I'm happy with my 100% return. If any of this stuff we've said comes off, that'll be great. If it returns to a dividend, that'll be great. But maybe it won't do any of this stuff. Maybe it won't do any of it. Now, I've got 2.5% allocation of my assets in this business, as I said. Not prepared to increase that really significantly. So that's what I'm going to do. Right, don't forget that Seeking Alpha link below if you're interested in upping your research game. We've also got a Trading 212 link below. If you use that, you're going to get a free share. All you need to do is deposit a quid. You're going to get a free share. Pretty good deal. Right, thanks for watching today. If you're interested in seeing how I did in September with all of my dividends, check out this video here. Peace out, man.